Today, we're sharing our second dividend update. If you guys recall from our last video, we will link it below. We mentioned that this is our primary account we will use towards achieving FIRE. Before we show you guys where the account stands today, we wanted to go over what we learned while investing in the stock market in 2020. Let's go ahead and get started. Hey guys, welcome back to our channel. We're Elma, Jerwin, and Chopal. We're two Asians and a dog. Our channel is about sharing our journey to reaching 8/12/2024, which is our retirement date.
As you guys know, in our channel we cover real estate investing, stock market investing, financial education, and once in a while we'll throw in a travel video. Make sure you join us to our path to 8/12/24, which is our FI day. Also, make sure you stay till the end, till the very end, for Chopal's tip of the week. First off, we failed in achieving our goal for 2020. As you guys know, we opened this account in March 2020, and our goal was to put and grow this account to $50,000 by the end of 2020, which is about a month ago. Even though we only had 9 months instead of 12 months, we really wanted to meet that $50,000 goal. Today we're almost at 40,000, which we'll go over later, but this is still a huge accomplishment, so we're not too disappointed. It just means for 2021, we have to grow and deposit $60,000 in this account.
If you're new to dividends, dividends are basically payments made by companies to shareholders as a reward for putting their money into the venture. A dividend is the distribution made from some of the company's earnings. We have a long-term plan for this account. We knew that regardless of what the market does, we will continue to be invested. If the market goes down, it will become a buying opportunity for us. Little did we know that March 2020 was just around the corner. Early March, as you know, the stock market took a huge drop due to the pandemic. This account and all of our other accounts dropped along with everyone else. Since our plan is long-term, we didn't have to sell any positions, so the losses we had in March was an unrealized loss. Unrealized loss is just what it sounds like. If, say, you took it out of the market at that time, your loss becomes a realized loss, since you would have sold it when you were down. Our account dropped, but we didn't sell, so it was just a paper loss. So before you start investing, create a plan. The plan doesn't have to be complicated, but you do need to create one so you can stay focused even in events like the market crash in 2020.
Also, the market will have its ups and downs. Volatility is the word we heard most in 2020, and in our opinion, we'll be hearing a lot more of it in 2021. Before March 2020 stock market crash, it was a 2008 real estate bubble crash. And before that, it was a 2000 tech bubble crash. After every single one of those crashes, the market skyrocketed up. Our advice is stick to it and believe in your plan. Always remember, high risk is high reward. And it's not about timing the market, it's time in the market. Now, on to what you guys have been waiting for, our dividend update.
Okay, so let's go ahead and take a look at the screen. As you guys know, we use Fidelity, but let's go ahead and take a look at our portfolio. Starting with Avi, we are up 36.11%. Our current value is $4,620.02. We currently own about 41 shares, and the current dividend yield is 4.71%. The annual payout is $5.20. Now, Avi declared a $1.30 per share quarter dividend increase. That's about 10.2% increase from the prior dividend of $1.18, and that's supposed to be payable on February 16th. Moving on to Chevron, we are up 14.17%. Our current value is $2,926.59, and we own about 30 shares. Now for Chevron, their dividend yield is 5.60% currently, and the annual payout is $5.16. Now we did buy a few new stocks starting in 2021, and we'll go ahead and take a look at those later on in the video. Moving on to Honeywell, we are up 36.92% with a current value of $4,179.86, and currently we own about 20 shares of Honeywell. The current dividend yield is 1.81% and the annual payout is $3.72. Now, Honeywell did increase their dividend. It went from 90 cents to 93 cents, which was payable on December 4th. That is an increase of about 3.3%. Okay, so moving on to Johnson & Johnson, we're up 15.27%. Our current value is $5,341.78. We own about 32 shares currently, and the dividend yield is 2.52%. The annual payout is $4.04. Okay, so next is 3M. We're up 10.7%. And our current value is $5,162.04. We own about 30 shares of 3M. The current dividend yield is 3.55% and the annual payout is $5.88. Moving on to Pfizer, we are up 14.47%. Our current value is $5,120.52 and we own about 139 shares. Currently, the dividend yield is 4.25% and the annual payout is $1.56. Now, Pfizer did declare a 39-cent per share quarterly dividend, which is about a 2.6% increase from the prior dividend of 38 cents, and that is supposed to be payable on March 5th. Okay, so next is AT&T. We're actually down about 4.13%, so it hasn't been doing really well for us, but our current value is $3,568.81 and we have about 123 shares. The current dividend yield for AT&T is about 7.13% with an annual payout of $2.08. Next is United Health Group. We're up 24.98%. Our current value is $3,537.39 and we own about 10 shares. The current dividend yield is 1.42% with an annual payout of $5. And then lastly, we have Wells Fargo. Currently, we're up 23.66% of Wells Fargo, and our current value is $4,281.80. We own quite a bit of shares. We have about 131 shares of Wells Fargo, and currently the dividend yield is 1.25%. with an annual payout of 40 cents, which is only 10 cents per share per quarter. So we may end up selling our shares in Wells Fargo since this account is focused on generating income and the dividend payments are very low. Let us know if you guys own any shares in Wells Fargo and what your plans are. And then that brings our total to $39,948.92. Okay, so moving on to the new stocks that we bought this year. Let's start with EPD. It's called Enterprise Products Partners, and we purchased 3 shares of EPD. Currently, we are up 7.52%. Our current value is $69.87. Like I said, we just bought a few. Our cost basis is $21.66 per share. The dividend yield for EPD is 7.85% with an annual payout of $1.80. Now, Enterprise Products Partners declared a 45-cent per share quarterly dividend increase, which is about a 1.1% increase from the prior dividend of 0.445 cents, which is payable February 11th. Now, a little information about this particular company. Enterprise Products Partners provides midstream energy services to producers and consumers of natural gas liquids, also known as NGLs, crude oil, petrochemicals, and refined products. Now, NGLs are used in fuels and petrochemical products, including food packaging, car parts, airplane parts, deodorants, makeup, wind turbines, and personal protective equipment such as masks, goggles, gowns, coveralls, gloves, and medical devices such as respirators. Now, crude oil is used in transportation fuels such as airplanes, boats, and vehicles, and petrochemical products including consumer electronics such as cell phones and televisions. Next is Altria, and currently we are down 0.95%. Our current value is $164.92, and we own about 4 shares. And our cost basis is about $41.63 per share. The dividend yield is 8.35%, which is huge. We don't have anything this high. The annual payout is $3.44. Okay, so a little more information about Altria. So Altria, through its subsidiaries, manufactures and sells cigarettes, smokeless products, and wine in the United States. It offers cigarettes primarily under the Marlboro brand, and then cigars under the Black & Mild brand, and smokeless tobacco products under Copenhagen. The company also produces and sells table wines and sparkling wines under Chateau Ste. Michelle. Next is Realty Income Corp. We're down 0.91%. Our current value is $348.84, and we own about 6 shares. Our cost basis is $58.67 per share. The dividend yield is 4.80%, and the annual payout is 2.81 cents. And it's actually a monthly dividend, which they pay about 23 cents per month. Now, a little information about Realty Income Corp. They are actually nicknamed the Monthly Dividend Company. Realty Income has raised dividends every year for at least 25 years. The company generates very predictable cash flow led by the long-term nature of its leases. The company is structured as a REIT, and its monthly dividends are supported by the cash flow from over 6,500 real estate properties leased to tenants under long-term net lease agreements, generally 10 to 20 years. Okay, so let's go ahead and take a look at our dividend monthly income in 2020. As you guys know, we didn't start investing into this portfolio until March of 2020, and so our first dividend payment started in May. In May, we received $49.50, and then June we received $79.85. Nothing for July, and then August we got $99.42, and September we received $198.48, which was a big jump. Nothing for October. And then November we got $100.92, and December $213.55. Now, as you guys know, and as I mentioned earlier, we are invested in O, which is a REIT, and it's a monthly dividend paying stock. And so our goal for 2021 is to have some form of dividend payment every month. Moving on is our income by the stock. So starting with Abby, it looks like they are the largest dividend income that we receive. We get about $127.51 from Abby. And then from Chevron, we get $95.75. Honeywell is $43.60. Johnson & Johnson, we get $60.79. 3M is $99.66. Pfizer, we get $116.26. It looks like T-Mobile is our second dividend stock that we receive the most, and we get $122.33. And then United Health is $32.22. And of course, Wells Fargo at $43.60. Finally, we made about $741.72 combined in 2020. Honestly, that's really not bad, and it makes us really motivated and excited seeing this number grow. As you can see, we currently have 12 companies we are invested in. As we do more research, we will continue to add to our portfolio. Let us know your thoughts on our portfolio, and if you guys have any dividend stocks you recommend, please leave us a comment below. That's everything we have for you guys today. If you enjoyed watching this video and you found value in it, please don't forget to hit that thumbs up button, and don't forget to subscribe if you're new here. We make videos on personal finance, real estate, and stock market investing. Now it's time for Show Pal's Tip of the Week.
Show Pal's Tip of the Week. If you see a dividend yield over 15%, make sure you do your due diligence. Having such a high dividend is usually not attainable long term for most companies.